Welcome to the Legacy All-Stars podcast. We feature inspirational stories from people who dedicate themselves to helping others. Here is your host, Alan Pavlosky.
All right. Hello, everybody. Welcome back to the Legacy All-Stars podcast, where we spotlight extraordinary individuals who are not just succeeding, but using their platform to create real, lasting change in the world. Today's guest is doing just that. His name is Mathew Owens. He's the founder of OCG Properties, a real estate powerhouse based on purpose. What sets Matt apart isn't just his business, it's his heart. He's deeply committed to helping others build freedom and legacy, especially through innovative programs like the Debt Validation Fund, which supports first responders facing credit issues. Matt, welcome to the show, my friend. It's good to have you here.
Thank you, man. Appreciate it. Looking forward to the conversation. Hopefully we can add some value to everybody.
Yeah, most definitely. Let's start at the beginning. Take us back. How did your journey into real estate investing begin?
Yeah, absolutely. So just to give you a little background, I went to UC Santa Barbara, got a degree in finance as well as economics and accounting, and basically started working at a CPA firm right afterwards, mostly because I wasn't sure what else I wanted to do, and I knew accounting was a good background, only kind of to find that I was bored out of my mind, like just in there going, I can't do audit and tax for the rest of my life. If I had to call another IRS agent to deal with, it's like, that's it, right? And at the end of the day, I didn't know what to do. I was kind of struggling, going, I can't emotionally get up and do this every day. I was going to a job that just was boring to me. You know, it was a good job. It was making me good money, but at the same time, like, was not what I really was passionate about, right? I needed something else that was interesting to me. I'm like, but what should I do? I mean, should I start a bar? Should I what should I do? You know, like, I have no idea. I'm in my 20s going, yeah, well, wait, you know, we're drinking a lot in our 20s. So, you know, might as well go start a bar, right? That was in your mindset, right?
I don't remember my 20s, Matt.
Yeah, there you go. Yeah. So many of us don't, right? So at the end of the day, my stepbrother calls me out and he's like, he was an engineer, bored out of his mind as well. And was like, hey, come check out this class that I'm going to. And he calls me up. He's like, you have to go to this. And he kind of forced me to go. I really wasn't interested in going too much. And then it happened to be all about real estate investing. And immediately my attention was like focused, and I knew right then that I had like a peak interest in something to where I was going to learn a lot about it. And I was immediately drawn toward that. I signed up for the classes and I took 2 years of classes and then quit my CPA firm job and just literally quit and went into real estate full time. I got my first deal under contract where I was going to make 30 grand on a flip, and I ended up making 20 grand on that flip because I didn't know my numbers right. Luckily, I made 20 grand on that flip. But, you know, I was just bored and going, how do I build wealth? And I read the book Rich Dad Poor Dad, right, to you know, change my mindset and saying, oh wow, I'm trading my time for money consistently instead of trying to build assets that are going to create cash flow for me, whether I'm working for it or not, right? And that piece, that shift in mindset, is really what pushed me forward to say, no, I need to be free. And how do I become free of never trading my time for money again, right? And don't get me wrong, through this process of being an entrepreneur, you're definitely trading time for money. When you're a flipper, you're trading time for money. That wasn't really building assets like I thought it was in the beginning. That's an active business that you're doing. Now, all the holds that I held on to, those were great and probably one of the biggest wealth building avenues I had. Actually, after flipping over 1,000 houses now, I realized, wow, I left over $50 million of wealth on the table by selling those assets when I did in like 2012 through 14 and 15, and seeing that happen. Luckily, I held a bunch of them, but now we have over 35 million lent out to flippers, and we make passive cash flow on the lending aspect of that. Now, passive on the lending side, that's still active operations. Same thing with the flipping, but the idea is hiring the right people, delegating that work out so it can be passive for you at the end of the day, whether it's an active business that you can step out of or a passive deal like a multifamily or a syndication or something like that. I hate to say rental properties are passive. They're definitely not. You know, they have a lot of workload involved. But so that's kind of my story. Now, you know, we've raised over 150 million now for real estate transactions. And I really started off with that kind of mindset involved of how do I help people and not how do I make a bunch of money, right? And we started off like back in 2008, we started a nonprofit organization called For Investors by Investors that teaches financial education and real estate education without a sales pitch. And we have 6 chapters throughout Southern California that have been running reoccurring every month since then. And through that community is how I was able to build all the resources I need for my business and things like that as well. And so starting off on that way of being able to help people from the start and teach people, have them not make the same mistakes I did when I quit my job in 2006 to go into real estate, thinking I was a real estate genius for 2 years, and then losing everything in 2008 and taking a massive punch in the face, only to stand back up and now flip over 1,000 houses. You become a lot more powerful mentally, and you can now help a lot more people now that I've been through that, those trials and tribulations. And there's been a lot more over the last 18 plus years. You can imagine how many headaches I've had to deal with flipping 1,000 houses, right? But being
No,
able to help
definitely.
people not make those mistakes has been amazing. So,
Yeah. You touched on this a little bit, but you've built more than a business. You've built a movement. What's the why that drives your work every day?
So in the beginning, like I was mentioning, it was just about not trading my time for money, right? And then of course I had kids. I have a 6-year-old and a 9-year-old now. And once you have kids, you become a lot more selfless, and you start thinking a lot more about, wow, what do I want to teach my kids, and how do I want to live my life, right? And
Right.
I realized that if I don't figure out how to exactly do that cash flow strategy and become free, then I am never going to be able to teach my kids how to do that. And I won't be able to, they will be stuck trading time for money and having that different mentality. So I teach them, the fundamentals of entrepreneurship. I teach them about money now. I teach them all different types of stuff. They understand real estate. They help me with the marketing sometimes. And, I like to pay them so that we can take tax deductions, of course, for those things.
That's
But at the end of the day, it comes down to being able to say, how do I teach other people, and more importantly for me, my family and kids too, how to invest in real estate, how to take control of their financial future. And it's not just real estate, it's other businesses and creating income strategies and diversification strategies to protect yourself along the way as well, and not make the same mistakes I did. And it's exciting to do that within the community. And we get to teach every month on these actual strategies that we implement to help people like achieve way more. And I see people that we started off with in 2008, and when they first got started, and I see where they're at now, and it's so exciting to see what kind of a level they've been able to grow to, and the amount of deal flow and the amount of projects they've been able to solidify for themselves on the freedom side. So it's
Yeah,
pretty
for
cool.
sure. Other than your kids, of course, and I've gone through the same moments myself. I have 4 kids. The youngest is 30, and I have a 6-year-old grandson. Other than those very significant people in your life, was there a moment or experience that really made you shift your focus from not just success but to significance?
So I think when my father passed away when I was 26 years old, and that was one of the biggest experiences in my life that I think shifted my entire mentality into wanting to live my life to make him proud, not
Hmm.
focusing on how do I make money, how do I do this, and how do I change my life. It's more about how do I help everybody else, because I know that the wealth for me will come as long as I help other people. It's all
That's right.
karma, right? At the end of
Yeah.
the day, and it's all energy, and we permeate that energy. And my dad was he was a ranger and a sniper in Vietnam. He was a black belt in Hapkido. He was the guiding person of my life that gave me direction and moral compass. He wouldn't even let me cheat on my taxes, for God's sake. It was horrible,
Hmm.
So and he was a CPA also, and so having that kind of moral compass, and then when him passing, it kind of passed the torch to me to be more of the head of the household, to be able to take care of the family, and everybody is looking to me to be able to help with that. I had a 1-year-old little sister at the time. My little brother is 3 years younger than me as well. Trying to kind of step into those shoes made me shift my mentality quite a bit to saying, well, what's the right move, Dad, that I should be doing across the board? And is it always going to be helping other people? Is it going to be, making you proud of me to do that aspect of it,
Mhm.
And, honestly, when I started doing that in the beginning, just teaching instead of selling stuff, I got profound joy from doing that because you realize how much of an impact you're making on other people's lives. And that changes the whole direction of their life by being able to show them like one strategy to implement or one thing to try to achieve to move them forward to get them to their goal, or bring them a resource that I already have at my disposal to help them to get to that goal a lot faster, right? And so being able to do that, you realize that helping other people is where true happiness comes from, like being able to get out there and be that guiding light for as many people as you can has been, life changing for me. And I say guiding light with, it sounds so weird to me because I don't feel myself that way, but a lot of people in the community, I help quite a bit with that financial side. And a lot of them look at it in that way, even if I want to not feel that way and be humble about it and say, no, I'm not that important. After
Mhm.
taking multiple punches in the face, you become humbled, at business. You're going, I can make just as many mistakes as everybody else, even with all this crazy experience. Right.
Yeah, we
So
call that getting your nose bloodied for sure.
yes, exactly. So,
You know when you then know when to duck.
right. Hopefully. Right.
That's great, Matt. Let's shift gears a little bit. I'm really excited to talk to you about the debt validation fund. Now, one of the things that really stands out to me and what I'm most excited to dig into is that. I mean, tell us about what the debt validation fund is, how did it come about, and what is its purpose?
So I think, this all comes back down to the financial education side of things that got me interested in this project for the start, where they are helping people invalidate their credit card debt when collection companies buy that debt from them, right? And wipe it off of their books through the legal process when these collection companies don't abide by the law. So them not abiding by the law opens up the doors for them to be able to invalidate their credit card debt and wipe it off and put them on a much better trajectory moving forward. And when you're involved in this industry and you understand what big finance does, what big credit card companies do, where they're, sign up for, 5 credit cards and get 5 free t-shirts in college, and they prey on people that don't have the right financial education. Don't get me wrong, there's still moral responsibility for people to pay their bills. When you start to understand the majority of, people running into major credit card debt, people think it's all about spending, right? And, not having the right financial education to do that. I mean, look at the inflation that we've had just recently, right? Most of the time also, you're talking about massive amounts of this due to health related issues and the problems that
Mhm.
come out of that industry where, people just can't afford these. The insurance policies now are really geared towards pushing as much of that major risk onto the actual, client as possible. So, people get into a lot of medical debt, and that's a big issue, right? People get into getting business loans and having issues with that where they can't afford to make those paybacks. So it's not just spending, it's a lot of other life problems that occur in everybody's life at some point where anybody could end up in the wrong financial position. It's not just a lack of financial education or, unregulated spending on the personal level, right? That is part of it in our consumerism society. But at the end of the day, you realize that, hey, this is a way with the debt invalidation to fight back against a lot of these banks and these big companies that are killing it. These credit collection companies, they go through and they buy this debt for like 2 cents on the dollar and hope to collect 5 cents on the dollar, and they're killing it, right? And so they don't care if they're abiding by the laws if a small percentage of their stuff gets invalidated because they're not able to do their collection practices. Those collection practices enable them to collect 5%. If they go collect 6 or 7% instead because of shady collection practices, but lose 1% because of debt invalidation and people challenging them, they're still going to do the business practice, right?
They're still
So,
killing it. I mean,
right. And so,
it's predatory in nature. It's unfortunate, but
right,
it's a reality of the way the credit industry works. So
right.
it's it's a great
And
service
it's
you're
part of the
providing with that
system.
fund. Yeah, for
Right.
sure.
And
You
so,
focus on you focus on first responders on this because there's so much of a need there. Tell me why first responders specifically.
So when I have a very big military base because my dad was a Ranger and a sniper in Vietnam, we've actually trained a bunch of Marines from Camp Pendleton on real estate investing and how to create financial freedom in their life after they get out of the military and they're transitioning out of the military. And we started with that involved in saying, how do we help the military as much as possible? And so we went, and when we were setting up our investment system with the companies we're working with to help them invalidate debt and the attorneys that we're working with in that regard, we said, hey, we want to set up a system and a discount program for first responders, active duty military, vets, as well as police and firefighters, and hopefully to add teachers to that mix shortly. But going through and setting that up for them where they get big discount programs on their debt invalidation. So if they're in trouble with their credit card debt, they can actually get major discounts on the legal services that are provided to them and get them out of debt at a faster pace. We're actually in the process also of putting financial education on the back end after these people go through those programs to get rid of their credit card debt, to be able to help them stay out of it and have the right proper financial education on the back end and financial tooling to set them up on the right path to success moving forward and put them in the right light, right? And so and what's actually happening here is when someone has high credit card debt and they can't afford their monthly payment and they're struggling, they got $1,000 minimums, $40,000 in credit card debt at 30% interest, and the credit collection companies buy this stuff for 2 cents on the dollar. They usually have a couple of options. One is bankruptcy. They could go bankrupt and have that on their credit for 7 years, and they're kind of starting over, right? They also can do a haircut where maybe they can't afford a full payment on all their stuff, so they're going to consolidate that debt and do a haircut for all those creditors at a more reasonable payment. But that means that they're still going to have a high interest rate. It's going to take them a long time to get out of that debt, and it stays on their credit like a bankruptcy does because they've taken a haircut. Or they
Hmm.
can do a consolidation loan, all those debts together. They can pay off that debt. It's still a much higher payment. Most of these people cannot afford that debt or that payment. And so they don't necessarily qualify for that other option that saves their credit. And so those are the primary options that someone is faced with when they're in this kind of a situation and they've been sold to collection companies because they can't afford it. And so debt invalidation comes in where they say, first of all, do these credit collection companies even have the right to collect this debt? Let's see how many of those we can wipe out off the top. And they analyze all that person's individual credit card accounts to see if they can wipe off that debt off their books, which is really super cool to be able to do that right off the top through the legal process. Then they analyze all their communications. Are they abiding by the Fair Credit Practices Act or the multiple other acts or laws that they need to abide by in their collection practices? And another big chunk of them can fall off and be threatened with lawsuit if they don't absolve that debt, for example. And there's 200 plus ways that they can actually invalidate that debt or make it so that it's an uncollectible debt where they don't owe that debt anymore and it can get wiped off their credit report and actually improve their credit along the way. And they're taking them from, an average of $1,000 minimums, call it as an example, down to a $250 to $300 monthly payment, fully paid off in 24 months with no interest and around a $6,000 legal fee receivable to do that. So they're taking them from a much higher credit balance with a much higher payment and crazy interest down to an average of a $6,000 total balance, fully paid off in 24 months at like $250 to $300 a month with zero interest involved in that scenario, so it takes them into a much better financial spot right off at the front, then cleans them up and gets them in a trajectory forward. Then we do the financial education piece on the back end, is the idea that we're putting in place now to help them with that process. And if we can go through at the same time and get major discounts for first responders and military and
Hmm.
vets and police and firefighters and teachers and things like that, then great, absolutely amazing. Let's go implement that and put them on the right trajectory at a faster pace because they deserve it, at the end of the day. So
Hey, Matt, this without naming names, of course, but can you give at least one specific anecdote of an extreme situation where somebody had a lot of debt, where you were able to help them invalidate a lot of that debt and put them in a better path?
Yeah, so we had one military member, for example, that had over $75,000 in credit card debt and got them on a monthly payment of around $400 a month on this out of that $75,000 to help them invalidate that debt. There's numerous clients that they have that have, positive reviews for them, that have gone through this process already to help them invalidate the account. The company that we work with has done over 70,000 of these types of contracts already, which is super amazing. And, with the capital we're raising for this on $50 million, it's going to be like over 30,000 contracts that we can go and help this with, which is really, really cool to be able to, help that many people invalidate their debt. Right. So
Mhm.
really cool stuff.
Very inspiring. And that's what this show is all about. And I'm super excited to have you on to talk about that. It's clear that giving back is baked into your DNA. I mean, beyond the debt validation fund, how else are you helping people grow and build their financial legacies and their own personal legacies?
So I think this is one thing that, is really not taught correctly, right? You have a lot of financial planners that make money a lot of times off of, the trades they make and things like that, or, stock picks, or, managing someone's accounts. They do a lot of good, right? They can help people get on the right budget. They can help people have the right insurance in place, have some of that portfolio put in place, but there needs to be some diversification, right? There needs to be an actual cash flow plan. Most of the time that I see financial planners, what they do is they build this, nest egg and say, yes, you're gaining wealth in stock, you're gaining wealth in all these aspects, but there's no specific cash flow plan to where they can retire off of those funds. Like if you have $15,000 a month in monthly overhead for your living expenses, you need to be making 20 to 30 in actual cash flow so you can go and reinvest the difference, help keep up with inflation, and live off of that during retirement so you're not actually going through and depleting the principal. The die broke mentality of hopefully you have enough money to last you through retirement is the
Hmm.
complete wrong strategy to utilize when
Right.
there's other investments out there that produce a cash flow stream that can carry you and be above inflationary returns, that can actually carry you through retirement and pay you so that you can live off of that and never deplete that principal. And so that to me is the key. And then having the right diversity, right? I don't just invest in real estate. I invest in the debt invalidation business, which is accounts receivable financing or legal fee receivable financing. We invest in other private small businesses that we invest in, along with debt investments and property investments. On the debt side, you get consistent cash flow streams coming in. On the
Hmm.
equity side, you get tax benefits. And you can front load those tax benefits to compound your growth. You can go through and do value add components where you're renovating units and increasing rents and decreasing expenses. You can go through and get a big chunk of equity on the back end along with cash flow long term on those value add projects, as well as use leverage, their inflation hedges. So there's benefits to different asset classes. So having the right diversified structure into debt, into equity. I even have insurance policies in gold and silver and commodities because if something happens to the US dollar, I want to have an insurance policy there, making up for any potential issues I have with my portfolio or anything that could blow up from a black swan event. I'm also a prepper, right? So life prepping. So I got water
Hmm.
barrels and food and things like that. Because once you have kids, you're like, okay, what happens if
Right.
the world
Right.
blows up, right? So I look at this as a holistic plan, right? It's a life plan. It's not just investing. Yes, your investing needs to be diversified. It needs to be cash flow focused. It needs to be wealth focused as well if you have enough cash flow, and mitigating risk, doing the right homework on that investment portfolio is key. But look at your investment portfolio as how do you want to build your life? You don't want to be a fix and flipper or a direct lender if you plan on not and trying to be passive and wanting to go on vacations all the time, right? You need to be able to build your portfolio the way you want to build your life. So that's why I invest. I have active operations where I have my team help step in on those operations to make it more passive for me, but it still requires some active attention, right? And then I
Hmm.
have a passive portfolio. I invest with other operators in mobile home parks and multifamilies and self storage and debt and all different types of asset classes. So I can develop a passive portfolio and I invest small amounts of money with different operators, different asset classes, and different markets around the country to diversify my portfolio over here. And then I have my active income streams over here where I try to be as passive as I can, which is difficult with all the content and all the, operational overhead and solving problems that other people can't solve, until you get more and more people, the right people in the right seats, right? So that's how I develop my plan. And I think everyone should be looking at it in that way, depending on their individual situation. Some people, they have to be active. They don't have enough money to necessarily
Right.
go through and just live off of the cash flow. Other people have a couple $1,000,000 that they can go in and slap down on multiple investments and build a portfolio for themselves where they could be retiring off of that money right now. I have people on that are investors of mine that are making $40,000 a month in cash flow and traveling the world because we manage the active operations associated with their promissory notes and their rental properties and things like that. And so to be able to see someone being able to do that in their retirement years, that is super rewarding when you're like, that's dope. Now can I get some so I don't have to work so hard too, by the way? So, and that's the whole idea though, is like I can make money off of their money, but after they've made a certain level of return, so there's incentive for performance where I make a piece of the upside potential based on performance, right? And that's how I think that's the big difference between, brokers that are dealing with stocks and bonds and mutual funds where they get paid whether you're paid or not. And they really take up like 65% of the gains in mutual funds and things like that with their trading and their fee structures versus and many times in the syndications that I invest in and raise capital for myself, it's always incentive-based performance in place. That I
Right.
think is key when you're investing with someone else.
Yeah, Matt, you are aware, I'm sure you're aware of this, but I recently released my book, Wealth with Purpose, which is focused on guiding others to build passive income with the intention of making the world a better place.
It's awesome.
What's something people misunderstand about building legacy through investments?
So I think what's amazing is people think that, hey, you're just building these investments over and over again, building wealth for yourself. And, what's amazing about this is that the people that are wealthy, that actually create wealth for themselves and their clients like this, enable a lot more people to donate, to do goodwill, to be able to add value to society as a whole. I personally believe that most money should be coming out of the government and going back to the people. And if the people have more wealth, they will provide nonprofits capital and things like that. And it's a much more efficient use of capital in that way. And so, a lot of people think, oh, you're a flipper, you're an evil flipper that's got to buy at discounts and all this. We're literally improving neighborhoods, which is amazing.
Hmm.
A lot of these houses are blighted. They need tons of renovation work. You're not going to find a normal homeowner that typically is going to go buy a property that needs $200,000 worth of renovation and clean up an entire neighborhood, right? And
Right,
add
right.
housing stock and a lot of times affordable housing stock to the market because you're buying existing homes in that way. That's just an example of, I think the goodwill that comes out of, this business is providing that to apply and give people more affordable housing out there. This is why we invest in mobile home parks too, because when you're investing in mobile home parks, you're literally buying and helping improve the most affordable housing and adding more stock. So one of the strategies with mobile home parks is renovating all the down units at the park, adding new mobile homes to empty slabs, which like on some of the parks, you're doubling or, multiplying that, getting multiples on your actual, current stock versus what you're adding to the park. And so being able
Hmm.
to add that affordable housing to the community is really, really cool, especially where there's a need there now. So you look at all of your investments in that way and say, is it the right strategy that I should be using? Is this something that's improving people's lives, or is this something that's just something evil that just is not something you should be, investing in the first place, right? So I
Yeah,
think
for
that is the
sure.
key to the whole thing.
I mean, that's why you and I get along so well in terms of our philosophies, but I appreciate that about you. Thank you.
Yeah, you can't
All
sleep
right.
at night if you have the wrong strategies there. You just like that's
Right.
the wrong, if you're screwing
Exactly.
people over, like that's just horrible. You're not going to be
Exactly.
happy long term in life. So
That's for sure. All right. Let's end with a lightning round. This is like a one thought that comes out of each of these questions. You ready?
nice. Yes, sir.
All right. Give me a quote or a mantra that you live by.
You're gonna laugh, and you're gonna think
No,
of my. I grew up in the '90s, and I grew up in Southern California on hip hop here in Southern California. And so Tupac actually has a quote. He says, "I got advice from my father. All he told me was this: get off your ass if you plan to be rich." And so, it's just a constant reminder to hustle and get out there and take action as much as you possibly can. And that mindset, I know it's kind of funny, the whole
no.
gangster hip hop mindset. But
There are poets in this world that have very profound things to say, and
there you
Tupac's
go.
certainly one of them for sure. Tell me a book that changed your life.
I think there's been a number of books, but the top three I'd say are Rich Dad Poor Dad, because it changed my mindset. Think and Grow Rich was a huge one, because it made you really, if you study that book in depth, it's literally the path to wealth. It's unbelievable.
Yeah.
And then Traction by Gino Wickman. It's the entrepreneurial operating system. And then How to Win Friends and Influence People by Dale Carnegie. All amazing books. Changes your mindset about how you interact with people. That Dale Carnegie book as well. Very, very, in-depth knowledge about how you permeate positive relationships in your life, and how you, I'll say, win at conversations with people. So
Yeah, for sure. All right, one more. One habit you swear by.
One habit I swear by: meditation. I consistently meditate every morning, and before I go in the house to go see my kids again, and get home, I meditate and try to focus on living in the moment as best I can. It's hard for an entrepreneur and hard for to shut your brain off. One, it massively changes your stress levels, especially breathing techniques using like Wim Hof techniques and things like that. Massively biohack you so that you can regulate your stress levels massively. And then of course, shutting your brain off so that you can live in the moment with your kids is how when I meditate in the afternoons or before I, go hang out with the kids. And those things have been life-changing for my mindset.
That's fantastic. All right, before we wrap, where can people find you, follow your work, and get involved, most specifically that I love this, with the Debt Validation Fund?
No problem. So you can go to my website, MathewOwens.com, with one T in Matthew because my parents couldn't spell. So MathewOwens.com. We also have a 200-point due diligence checklist on that site that you can download for free. The ones we used when we're going over all these different deals that we're investing in. You should always do your homework on your deals. And that's the best way to reach us, is doing that. Or you could reach out to us via the contact page on that page as well to reach out about the investment stuff.
Super cool. This has been powerful. Thank you for showing us what it looks like to lead with purpose, build with intention, and never forget the people who serve and protect us. You, my friend, are a true legacy all-star. I appreciate you. And to our listeners, remember, legacy isn't what you leave behind for people, it's what you leave in them. Until next time, keep building boldly.